Golden Iron Resources is an unlisted public company, holds 3 gold projects in the Southern Cross Greenstone Belt, which is a historically highly productive belt, but quite often overlooked in the West Australian area. Both the Mount Dimer and Gwendolyn projects were previously operating gold mines and contain existing resource. Mount Dimer mineral resource estimate is 81,000 ounces at 6.94 grams per tonne, and Gwendolyn is 94,700 ounces at 1.5 grams per tonne. The Mount Dimer project also has a substantial exploration upside with an exploration target of over a million ounces at about 5.9 grams. The company's strategy is to look at putting one of the projects into production and use that production then fund the exploration at the Mount Dimer project and a consolidation within the region of additional projects in the area that contain known gold mineralisation in advance of a listing on an appropriate exchange at the time. So from a highlights point of view, we've got existing resource that we're upgrading to JORC 2012 currently. We're looking at recommencing production at Gwendolyn and becoming a self-funded explorer. The main exploration upside is within our existing tenement package in the Mount Dimer region, but there are other tenements within the area that we're negotiating acquisitions for. And within that area, there's probably an existing resource base of about 500,000 ounces that, due to the grade, is stranded and not within an economic zone for processing at the local mills or the mills within the region. So we believe that the strategy is to get a mill in the area, and we'll slowly be able to try and consolidate some of these additional resources into production in advance or along the way, seeking a liquidity event. As we can see, the 3 projects are all located in the Southern Cross Greenstone Belt area. Gwendolyn to the north is about 160 kilometres north of Southern Cross, Mount Dimer 110 kilometres northeast of Southern Cross, and Mount Palmer in the south, 30 k's southeast of Southern Cross, all within known gold mineralisation. Mount Dimer has high grade, historically 6.5 grams per tonne, so grade is really important, particularly with options that we can look at like toll treatment if we wanted to. Gwendolyn and Mount Dimer are both permitted and ready to mine, so a lot of the hurdles with regards to commencing operations have already been achieved. Mount Palmer is close to existing infrastructure, and that's really an exploration play and is really just on care and maintenance until we get the other projects into production. From a easier point of view to look at where the tenements are regionally, that probably gives a better outline. Our current tenement package is 23 tenements covering 181 square kilometres, including 6 mining licences, 1 at Gwendolyn and 5 at Mount Dimer. As I said, we're in negotiations to acquire a large tenement package which will be within this area here, in between Gwendolyn and Mount Dimer. Mount Dimer was discovered in the 80s by Western Mining Corp, and they found gold mineralisation and nickel. They did some trial processing and production of vat leaching of a large laterite type body. It didn't meet their economic hurdles, so they sold the project. It then got developed by Glenn Gold, who folded into Tectonic, and it produced between February 94 and July 97. It did 133,000 ounces at 6.5 grams per tonne and 183,000 ounces of silver. So it produced about 1.4 ounces of silver for every ounce of gold. And considering they only had a 20 tonne per annum plant there, that was a production rate of about 40,000 ounces per annum, which is very good. They ceased mining in July 97 due to the gold price falling below $300 US an ounce, and they changed their focus to nickel because nickel was really taking off in the time. Historically, there's 6 open pits and an underground development, and there's substantial infrastructure on site with tails dam, airstrip, campsites, all still there, but no infrastructure on them. Importantly though, since Western Mining Corp did the exploration, there's been no additional exploration or modern exploration. There was a small drilling program of about 61 holes done in 2012. That really confirmed and QAQC the Western Mining Corp database and apart from that, there's just been some airborne geophysics. There's 33 brownfield and geophysical exploration targets identified, a lot of them with non-mineralisation. As we can see, it sits, that's where the Mount Diamond sits. There's two styles of mineralisation. As I said, it's a laterite deposit and shear zone hosted gold, as you can see in the edges of the quartz veins there. If we look at the resource makeup today, it's largely under and adjacent to existing pits. There's further extensions that have been identified and unmined to the south of Golden Slipper, Lightning, Anomaly 2. These are fully permitted, and underground extensions off the underground mine below LO1, 2 and 3, and a smaller deposits open pittable over at LO6. Significantly, it's really the grade that makes this an interesting project. Here we've got just some significant unmined drill intercepts. So we've got 6 metres at 24, one at 136, one at 39, 4 at 21, 6 metres at 26, one at 43, one at 252, 2 at 40, 2 at 71. So it's got nice grade, and that's really what makes the project interesting from our point of view. Even along the airstrip here, grading the airstrip to keep it in condition, clip the top of a quartz reef 1 metre at 9 grams. From the underground point of view, there's 13 levels of development, which really targeting the LO1 and LO2 lodes. The 4 lower levels were developed but unmined. They also pushed drives out to the LO3 underground and LO4 underground and only mined 1 level. They were all open at depth and had a measured resource when they under JORC 2004, but that all needs to be upgraded under JORC 2012, and we need to re-establish access into the underground, which we're doing over the next 4 months. From an exploration point of view, the shaded areas in gold are geochemical anomalies, the circles in red are geophysical structural anomalies, and they correspond quite well with some of the known drill intercepts. Stepping out a little bit from a more regional point of view, our tenement boundaries are in green here. We've got all these number of additional anomalies that we have to the north. These are also on mining tenements. Notably woodcutters with a 1.5 kilometre strike, and there's been no follow-up drill program since this was drilled in the early 90s. 7 metres at 7, 5 metres at 8.5, 4 metres at 6.8, 5 metres at 4.85, and Kalen Hill 8 metres at 7, 2 at 16 and 2 at 15. As I said, we continue to believe that there's really substantial exploration upside within that region, and this has really been forgotten in exploration terms, which is not unusual. Many assets have been. Looking north to our Gwendolyn project, this has been historically mined in the late 70s and then had a bulk sampling program in 2014. Had a previous JORC resource of 121,000 ounces at 1.3 grams signed off by Ravensgate. That was in 2013, right on the cusp of JORC 2012 coming in, but that was JORC 2004. They did a bulk sampling program, but that ended up being sub-commercial, largely due to the exchange rate and the Australian price of gold at the time and the high expense associated with hauling it over 300 kilometres. We own 100% of these tenements, including the one mining tenement. The current resource post-bulk sampling is 94,000 ounces at 1.5 grams. And there's that's actually 60,000 tonnes of ore stockpiled on site from that bulk sampling program. And that was the ore that was sub-economic to haul. And that grades between 0.5 gram to 3 grams. There's 2 stockpiles there. That's the low-grade stockpile, 0.5 to 1.7 grams. And that's the high-grade stockpile, 1.7 to 3. Epithermal style deposit, here's some resource numbers. I'll just flick through these really quickly. Again, some really high grade drill intercepts, 263, 339, multiple drill intercepts above 50 grams a tonne, many in the double digit numbers. So, but quite a bit potty. This resource is also open to the southwest and at depth, so it's got upside potential. Very straightforward metallurgy on both projects, high gravity recovery, and both of them leach extremely well. Mount Palmer is an exploration play that I won't go into because I've run out of time, but our strategy is really to look at putting Gwendolyn into production and use that to cash flow the rest of the business moving forward. And we're looking to upgrade the resource to JORC 2012 before the end of the year and complete our studies on putting Gwendolyn into production also by the end of the year. Thank you.